great delight to have with us Mr. Vijay Valecha, Chief Investment Officer at Century Financial. Welcome with us, Vijay, at CNBC Arabia. Let us talk about the movement of the oil price, which we had despite the drop. Yet we can see once again testing the levels of $80 for Brent. On the other hand, one of the main fundamentals that the markets are pricing in are the concerns related to the recession and weakness in the demand. Let us start by the latest developments. We had the IEA criticizing and giving their statements for OPEC to believe that the OPEC Plus last decision, has it really been sound? Has it been a correct decision to cut the production?
Well, it is difficult to say if it was a right decision or a wrong decision. We did see oil prices come up on that week when the oil supply was cut. However, we have seen recession fears looming in, and it's affecting all commodities, including oil. We actually are seeing a lot of inventory drop in the US markets, and even though the inventories are dropping, in spite of that, we are seeing oil prices coming down. This will be another weekly drop, and again, that's majorly because the recession fears are still not out. So it's very difficult to say if oil output cut was the reason for was the right decision or not. It's very difficult to say as of now.
Vijay, let us talk a little bit about the oil prices. What are the risks that the investors fear, and to what extent you believe that these cuts will start leaving impact starting next month, and to what extent the prices will be affected by the cut of production and less supply as expected in the market, and consequently the increasing growth from China, growth in demand from China as per the current circumstances?
Well, investors have not had a very difficult time so far in oil, especially in the last 7 or 8 months, and that's majorly because oil has not moved as volatile as it usually has been in such bad times. So we have seen oil prices move, but it has not moved on a per day or a per minute basis as much as it actually we have seen it move. So it has actually quite stable. Yes, it is pretty much in a range between 75 to around $95 a barrel, and it pretty much looks like it will remain over there. We do see that China is increasing the demand, and that could take oil prices further up. But again, that upside move, or even if we see the OPEC Plus actually cutting oil production, even that upside move will be pretty much within the range. So investors are not finding oil as a very difficult instrument as of now to be trading it. But yes, for long-term investing, it is not looking as the most fruitful instrument.
Let us also talk about the supply in light of the cut in the production that the markets are expecting in May. We heard the Alexander Novak, who said that OPEC Plus lately doesn't see a need for further cuts, despite that we have seen a drop in the Chinese demand as it was expected. In your opinion, will we really have such trends, and will these trends continue regarding the situation in the markets?
It's always been the beauty of OPEC Plus, where they have always said that they will not have further supply cuts, but then it's always a surprise. So it's anybody's guess if it's going to be a surprise this time around also, or it is going to be actually no more further cuts. But I think it's going to be just a measure of price. If the prices do keep sliding down further, and if we do see Brent below $70, I think the OPEC Plus will definitely sit on the table and rediscuss their strategy.
Vijay, another question here. What are we to expect for the coming period? Not only about the end of the first quarter, we are now in quarter 2. Reports say that we have an increase on the fuel in the US, and also in the jet fuel in China. We had an increase in the demand now that we have the tourism and the travel season. Will this support the prices, in your opinion, in the coming period? Or if the price continue to drop, will OPEC Plus have to once again to cut their production in light of what the markets are pricing in of the recession?
Well, the markets are pricing in a recession, and that is the most important factor right now. Definitely travel, tourism, and jet fuel demand increase will bring a boost to oil prices, but I think that will be very temporary. Over the major period of time, it is going to be if the GDP numbers can get better. We saw a 1.1% US GDP yesterday. It was a much more disappointing number, to be really honest. And if that continues, and if the CPI numbers on the 10th really come out anything above 6%, that could be a really, really bad sign for the markets, and not just oil, but the entire markets overall. We do have the FOMC on the 3rd of May, and that will definitely determine if there are going to be further rate hikes. So, market has priced in a 25 basis points, but the market has priced in no further rate hikes. So if there is any indication of further rate hikes possibility, and if we do see the inflation numbers bad, that was actually the more important factor than just the jet fuel.
Vijay Valecha, Chief Investment Officer at Central Financial. Thank you for being with us.